Hello and welcome to our weekly look ahead at the markets here. And it's been a pretty choppy month for global stock markets, among one of the worst months in some time for equities in August. We've seen bond yields moving sharply higher, so big repricing in the fixed income space, and that's saw the US 10-year yield, that benchmark, hitting its highest in 16 years, and it was across the sovereign bond spectrum. We saw yields at multi-year highs. That move cooled somewhat though midweek as we saw some PMI data coming out of the Eurozone, which was pretty soft, and also out of the UK again, also quite weak. So although the US economy is holding up pretty well, the Eurozone and the UK are not faring so well, and that pressure on those economies has seen global bond yields retreat somewhat in the last couple of sessions. So looking ahead to this week, there's a lot of importance being placed on some key inflation data. That's going to guide maybe where the central banks are leaning towards. Now, we do think that they're probably leaning towards halting the rate hiking cycle. The ECB in particular, after those numbers, is probably very likely to pause in September. The Bank of England might have one last hike in it in September, but again, it doesn't want to be the outlier as the Fed is winding down its path and cuts the engines and glides in. Inflation data coming out over the next coming days, as I say, will be important. We get the flash Spanish and German numbers. That's a day ahead of the Eurozone numbers. Inflation has been coming down, but it's still too high for global central banks, at least that according to their existing mandates. They may tacitly or explicitly start to accept that inflation is going to need to be materially higher for longer, and there's not a lot they can really do about it. And we also get the US PCE numbers. Those are the core PCE numbers, that one that the Fed looks at. That's coming in the coming days as well. We also have the non-farm payrolls. Now, non-farm payrolls have been holding up very well. The US labour market's been holding up very well, but we have seen revisions to those numbers, and it's maybe not quite been as glossy as it appeared at first. But nonetheless, the US labour market continues to show resilience, and that's going to allow the Fed to maintain restrictive monetary policy for a while yet, and it probably won't be cutting rates next year, at least, or that is what it's saying to the market right now, and the market might be believing it. When the global recession does hit and we get a big credit event, then perhaps it will be cutting rates pretty swiftly, and the ECB and Bank of England will follow. Also due up this week, we have the some PMI data out of China. Well, obviously it's a country that's been struggling with some numbers and some of its economic activity in the wake of COVID, but also the property market there, which has been coming under tons of pressure. So looking to see what sort of domestic demand is looking like in China. That's obviously a good guide for European markets after the Asian session, whenever those numbers come out. So keep your eyes on those Chinese numbers. And in terms of earnings, obviously we're coming off the back of that Nvidia report, which blew away expectations. Nvidia is the powerhouse. It's driving market sentiment at the moment. And this week, we're not really seeing an awful lot. There's CrowdStrike, there's Salesforce at Dow components. So Salesforce is always one to watch. But other than that, not a heap of earnings out there. That's it for now. Thanks for watching.